Subscriptions opened for the IPOs of two Chinese companies, Guangdong Xinbao Electrical Appliances and Zhejiang Wolwo Bio-Pharmaceutical. That marks the official resumption of initial public offerings on Wednesday on the Chinese mainland after a freeze of more than a year. Neither of them gets listed on Shanghai A-share main board, but only on the Shenzhen board so far. The two together are expected to raise more than 1,000 million yuan. Looking forward, some A-share strategists say that the valuations of the first batch of IPOs are expected to be pushed higher after their debut, as investors are passionate after a long thirst. But will they actually buy these two stocks?
Guangdong
Xinbao has a price-to-earnings ratio of 30 above an industry average of 22, while the P/E ratio of Zhejiang Wolwo is 39. The ratios are set lower than we've seen before, but they're still not cheap and not attractive enough compared with stocks on the secondary market.
The top securities market regulator, the CSRC, says there will be a total of 50 new companies going public in January. Analysts say the new round of IPOs the finalists of a long-distance run.
These 50 companies have passed the strictest financial auditing and health checks. Some have been waiting for more than a year, while some have queued up for more than 2 years, and the market has been longing for the day of an IPO reboot.
The real market appetite, we still have to wait until Friday when the two newly listed companies announce their results of their subscriptions. Xiaocheng, CCTV.
The new subscription process requires investors to invest a minimum amount of 10,000 yuan. That's the threshold. Under the rules of Shanghai Stock Exchange, each lot of 10,000 yuan is viewed as one subscription unit, and one unit allows investors to purchase 1,000 shares. The rules are more flexible on the Shenzhen bourse, which sets one subscription unit at 5,000 yuan market value with 500 shares.
The investment amount cannot be placed on both the Shanghai and the Shenzhen Stock Exchanges. They operate separately.
Many investors are finding themselves in a tough situation of either lacking cash or not enough premium to be paid. Holding the minimum amounts of shares is only the ticket, but investors also need enough money to purchase the shares. Investors' trouble can be financial institutions' luck. The Guotai Fund has created a new type of securities loan tailored for new stock buyers, the first of its kind.
The loans were sold out within 5 days and raised nearly 1.5 billion yuan.
Analysts expect most new stocks to go public on the Shenzhen Stock Exchange rather than Shanghai's, and for investors, it's wiser to try his or her fortune there. Zhang Meiyuan, CCTV.